How the culture of trying to beat the system can lead a company into committing fraud. The example of the Trump's company business practices. On February 17, 2024, a judge issued a judgment against Donald Trump and his company in New York for misrepresentation of asset values. The New York Attorney General's office accused the Trump organization of fraudulently inflating asset values to obtain loans and tax benefits. Judge Arthur Engoron ordered the former president and the Trump organization to pay over $354 million in damages and barred Trump from serving as an officer or director of any New York corporation or other legal entity in New York for 3 years, including his namesake company. New York Attorney General Letitia James, whose office brought the case, said that with prejudgment interest, the judgment totals over $450 million, an amount which will continue to increase every single day until the judgment is paid. What led the Trump organization into the situation? Before we continue, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. Now, this is not the first time the Trump organization has faced scrutiny in its accounting practices. Trump himself suggested during his 2016 presidential campaign that he had used the system to his advantage in the past and that he wanted to use that knowledge to benefit the country. By saying that, Trump admitted that he took advantage of every existing law for his benefit to avoid paying taxes as much as possible. Among other things, Trump has employed strategies such as carrying over losses from one year to another to reduce his tax liability, especially with a $700 million loss he claimed to have sustained in 2009 at the height of the Great Recession. Like many other companies with a culture of trying to beat the system, they resort to using creative ways to take advantage of any loophole they can find in the accounting and tax laws. For example, Donald Trump used goats on his golf course in Bedminster, New Jersey as a tax strategy. Here's how it worked. Trump's golf club in Bedminster keeps goats on the property as a way to qualify for a tax break for farms. The roaming goats allow Trump to claim New Jersey's farmland assessment reduction. This tax-shaving strategy has likely saved Trump more than $3 million since the club opened in 2004. In 2020, Trump paid $700 in property taxes for the 119-acre portion of his Bedminster Golf Club that's registered as a working farm. If the farm were taxed on par with the golf course, he'd be on the hook for approximately $199,000 more per year over the past 2 decades. In another case, 2 Trump organization companies were indicted and accused of using a variety of methods to reduce payroll liability from executive salaries through untaxed bonuses and luxury perks worth millions. It is important to note that some of these practices, even though they could be illegal, are viewed as pushing the envelope. Some of these examples are tax avoidance, which is the use of legal methods to reduce taxable income or tax owed. These accounting practices are often subject to scrutiny and interpretation by tax authorities. They can easily be seen as unethical. The borderline between these creative accounting methods being illegal and legal is very thin, and one never knows when they cross the border. The difference between tax evasion and tax avoidance largely boils down to 2 elements: lying and hiding. For example, putting money on a 401k or taking advantage of a tax-deductible donation are perfectly legal methods of lowering a tax bill or tax avoidance, as long as you follow the rules. Concealing assets, income, or information to dodge liability typically constitutes tax evasion. The Trump organization is not the only one trying to beat the system. Other companies such as Enron used creative accounting to commit fraud. Enron used Special Purpose Vehicles or SPVs or Special Purpose Entities or SPEs to hide their debt and toxic assets from investors and creditors. This made the company appear more profitable than it actually was. Enron used the mark-to-market accounting method that allowed it to evaluate assets based on current market prices. However, Enron used to inflate revenue figures by protecting future profits and not adjusting these values to reflect actual earnings. Under the leadership of Jeffrey Skilling, Enron transformed itself into a trader of energy derivative contracts, acting as an intermediary between natural gas producers and their customers. The complexity of Enron's business empire provided opportunities for creative accounting. No need to say that the scandal led to the bankruptcy of Enron Corporation in 2001 and the dissolution of Arthur Andersen LLP, which had been one of the largest auditing and accounting companies in the world. The fallout from the scandal resulted in significant legal and regulatory changes, including the enactment of the Sarbanes-Oxley Act to hold corporate executives more accountable for their company's financial statements. In summary, while it is good to find legal ways to make benefits, it shouldn't be in the company's culture to beat the system at any cost. If a company has such a culture, its employees will do anything, including fraud, to meet the company's goal. And that company would not like to end up in the news like Enron or the Trump Organization today, would you? Thank you for watching, and please like, comment, share, subscribe, and push the notification button so you will be notified when we upload new videos.